Welcome to Short View Trading. It's Monday 31st of October, last day of the month, last trading day of October. It's around 9 a.m. London time, and we want to talk about what matters for markets if you want to trade equity index futures on a 1 to 2 week basis. What factors should you be looking at? How should you be going about trading these equity indices here on out? Well, there's a lot of things that drive equity market direction. There's a lot of things you can look at to give you some insights into how to go about trading them. One in particular that we like is models. And there's a model I'm showing you on the screen now that we've been using to help us gauge these swings in this bear market over the course of this year, 2022. As you can see, this is a model that's picked up pretty well the highs, the local highs and the local lows, what I call the 1 to 2 month swings in equity markets. The primary trend in equities is down, it's a bear market, but within that primary trend, you get these multi-month swings, and this model is very good at picking it up. This is a risk appetite model. It's a medium-term, month-by-month gauge that we like to use, and it's something we've been leaning on a lot in the last few weeks in particular to give us confidence that a bear market rally is underway over the course of October. And indeed, on a tactical basis, rather than a 1 to 2 week basis, which we look at in the daily rag, on a tactical 1 to 4 month basis, we closed our underweight on the 27th of September, moved overweight at that date, and added to that at the beginning of October as we anticipated this bear market rally. So this model's been very helpful in terms of gauging that. A bunch of other models we look at in the tactical product. Today I'm going to talk to you about the daily rag, but that's the tactical basis. So that's factor number one you want to think about when you're thinking about market trends. Factor number two is really the macro theme of the day and the macro drivers of the market of the day. These of course change all the time and rotate as you go through the quarters and years of a stock market, whether bull or bear. Now in this year it's all been about interest rate expectations, real interest rate expectations and Fed fund rate expectations. Those two of course are tightly linked, and what you'll find is where interest rate expectations go to tends to be where the real TIPS yields go to as well. And as you can see on this chart in front of you now, if you knew the path of real TIPS, you would have known the path of the equity market as well. The two are closely correlated over the course of 2022. So the macro theme of the day is critical to helping to judge how you should enter and exit trades on a short-term 1 to 2 week basis and on more of a medium-term month-by-month basis. But the third factor I wanted to talk about, which I think is really critical, particularly for the rag trader, the daily rag, the 1 to 2 week swing traders in equity markets, the third factor that really matters is how markets react to news flow. And indeed, last week was a case in point. We had terrible news flow from tech companies in terms of their earnings. Apple was the only mega cap tech that really beat or came in line, even though there was some niggle about the detail of their reports. The rest of them disappointed either on guidance or earnings. Microsoft, Google, Amazon, lots of big cap tech names disappointing and ending up seriously down on the day in terms of their trading performance after their earnings had come out. Yet despite that, the equity market rallied throughout the week. The Nasdaq closed up. Other equity indices closed up even more. As you can see on the chart in front of you now, this is weekly performance. The S&P up just short of 4%. The Dow Jones up over 6%. And many of the mid and small cap indices up between 4, 5, 6% or so. So very strong equity market performance despite very disappointing earnings news flow from some of the biggest names, or in fact the biggest names in the S&P 500 in terms of market cap. So the news flow and the way the market reacts to it is also a critical insight into where the market's likely to be going on that 1 to 2 week basis. So for us, that news flow, that response to the news flow was a further confirmation that we're in a bear market rally. So to see how we're playing this on a 1 to 2 week basis, please see the daily rag available to subscribers over the website. Or if you're interested in a free trial, please click on the link below. We'll send you the daily rag, or the rag trader as we sometimes call it, for free for a number of trading sessions. You simply need to give us your name and email address. No credit card details required. Thank you. So what are we watching today and this week? Well, it's a really busy week. We've got some key central bank announcements, some monetary policy decisions. The Fed is the big one on Wednesday. The consensus is they'll do 75 at this meeting. The debate is really whether or not they'll start hinting more heavily at the idea of a pause next year, and indeed heavily at the idea of maybe only 50 basis points at the December meeting. That's what the market's been thinking about. That's what it want to hear an update on, and that will be critical on Wednesday. Then on Thursday, we've got the Bank of England. Not as key an important bank, but still pretty important central bank, expected to raise 75 bips, also a press conference. So that'll be watched closely as well. And then over and above that, it's a big data week for the US. We've got payrolls at the back end of the week on Friday, ISM manufacturing and non-manufacturing over the course of this week, ADP employment ahead of that, all sorts of stuff going on across the globe in terms of key macro, added to which price action will be key, earnings will be key, and so on. So that's it from us. That's your morning market hit for Monday, 31st of October. Thank you for listening. Please do subscribe to these videos on YouTube. Simply click on the subscribe button or follow us on LinkedIn, Twitter, and or Facebook. Thank you for listening. Stay safe, trade well.